Alright, what's up everyone? Welcome back to the channel. This is Anil, and today's video we're going to be looking at Trivago stock. We're going to look through why it's crashed so much, why you might be interested in buying it, why you might not be interested in buying it, and then I'll give you my own personal opinion on what I'm doing in regards to Trivago stock. So with all that said, let's get straight into the video. Okay, so if you don't know what Trivago is, it's a German company, and basically what you can do on their website is you can compare hotel room prices or hotel rooms. So say I want to travel to London and I want to stay there for 2 nights. I go onto Trivago, I put in my dates, I put in the amount of people, and then I can see all the different hotel offerings. And essentially the idea is that if there's multiple sites saying different prices for the exact same room, like in a certain hotel, on one website it might be £79 per night, and on another it might be £69 per night. Trivago will show me all the options and I can find the cheapest one. So it's kind of like Skyscanner, except for hotels. Alright, so let's just bring up a chart of Trivago stock. So Trivago IPO'd a few years ago at about $11 a share, went up and up and up, up to $22 per share, then crashed and has been pretty much a falling knife ever since. And when the coronavirus came through, obviously the travel industry is taking a huge hit. So Trivago is not looking pretty at the moment. It's a penny stock basically at this stage. So since the coronavirus, it's fallen another 50%. So it's really starting to be a really cheap stock now. It's almost 95% down from its lows. So that's why I was interested in having a look to seeing if it could potentially be a nice turnaround play to get anywhere near maybe even like a few dollars per share in the future. So let's go through the bull points or the good points for Trivago, and then we'll go through the bad points, and then I'll give you my final thoughts. So firstly, Trivago is finally starting to make a profit. It hadn't made a profit its entire lifetime. It's been around quite a long time. It was around a good few years before it went public. But 2019 was the first year they actually made a profit. So they made 38 million in profit, which isn't a huge amount. That's an alright amount. But at the current market cap, even after it's dropped all that much, so it's really dropped significantly since 2019. Even with that drop, the PE ratio, like those earnings for 2019 with the current market cap, still gives a PE ratio of 15. So it's not a hugely cheap company in a price to earnings sense. The price to sales is very cheap though. Okay, so as we can see, the price to sales is extremely cheap at the moment. It's the cheapest it's been in years. So it's 0.58 in comparison to its average, which is just over 1. And its price to book is also much cheaper than usual. So a 0.5 price to book. So on those two metrics, Trivago is a very cheap stock. I'll throw up a little graph here of the revenue and the earnings for Trivago. But you might notice the revenue has actually declined in the last couple of years, even though the earnings have come up. So basically they're trying to be a lot more strict with their expenditure. So they've really reduced all their expenses to try and make a profit, and they have done that. And hopefully can continue to do that in the future. Obviously, their industry is absolutely obliterated at the moment because of the coronavirus. They're not going to make a cent in the next couple of years. And it's also not great to see the revenue declining. So I'll go through why the revenue is declining. But the last point about Trivago, why it is potentially a nice stock, is because the balance sheet isn't all too bad. Yeah, so they've been selling shares since they IPO'd, and this has essentially given them a nice bit of cash on their balance sheet. But it's going to further dilute the shares that anyone owns. So in 2016 they sold 127 million worth, 2017 193 million worth, 2018 187 million worth, 2019 184 million worth. So adding those up, it's much bigger than the entire market cap of the company now. The entire market cap of the company is half a billion, so 500 million. So they've issued a lot of shares, to say the least. But at the moment they have 220 million in cash on their balance sheet and 1 billion in total assets. But a lot of those assets, a nice proportion of those assets is goodwill and intangible assets, so we can't really count that too much. and they don't have any long-term debt, but they do have some liabilities for this year, but no long-term debt, which is good. It means they can survive for the next couple of years. So potentially with the low price to book, the low price to sales, and the decent balance sheet, this is really looking like a value play. So if you're a value investor, this might be a very, very interesting stock for you, because it could potentially, if it gets anywhere, it could continue falling, but if it gets turns from a $150 stock back to a $3 or $4 stock in the next 5 years, that's a 2x, so it's not bad. But you must be warned. Let's run through all the reasons why it has fallen so much, and maybe you might reconsider whether actually this is a good investment or not. So the first and probably the biggest problem that I see with Trivago is the enormous amount of competition in the industry. So there's Booking.com, there's Agoda, there's TripAdvisor, there's countless of these price comparison sites. Whereas say for like Skyscanner, there's only really Skyscanner and maybe a couple of others. But in the trying to find accommodation website finder, there's so much competition. And now we have a new competitor who's just come into the market recently, which is really, really dangerous. And that competitor is Google. So now you can actually, on Google Maps, you can search hotel. I want to stay in hotels these nights. Basically the same thing as what Trivago offers, except it's just right in the Google Maps feature. So it might be a little bit more obvious to consumers who don't know about Trivago. They might just see the Google one already. So for Trivago to get new customers, it's going to cost them money. They're going to have to continue advertising, and Trivago's biggest expense is advertising. So they're going to have to continue that if they want to get new customers. Whereas Google might just get some from people using the Google Maps platform, and then they see, oh, I can just look for hotels on Google. So that's not a great competitor to have Google, and also all the other competitors are much larger and more established, like Expedia, Booking.com. They're really popular. And just the last point about Google as well, a lot of Trivago's traffic comes from Google search, so search engine optimization and paid Google ads. So maybe there's a little bit of incentive for Google not to rank them as high as they could, if you know what I mean. Maybe Google will kind of keep them lower and show their service first. So that's a potentially, I don't think that would be legal, but I think maybe it could happen, you know. One more bullet point that I forgot to mention, which kind of ties into the competition. Expedia Group, which is kind of a similar idea, owns 20% of Trivago. So I think if Trivago really started to hit the dumps, I think maybe Expedia could buy them out. So there is a bit of incentive there for Expedia to not let Trivago go bankrupt. So maybe they could buy them out if Trivago kept going lower and lower, because they don't want to lose their 20% stake. So there is a bit of a safety net there, potentially, just to be aware of that. Expedia owns 20% of Trivago. I think if you're looking for gains, I think it's going to be a few years before this industry really takes off again. The whole industry is in a declining growth, so it's actually in decline. The only one that's doing well is Booking.com, and I looked into that. It's not really cheap as it should be. There are plenty of competition, and they've all been hit hard. But yeah, Trivago has definitely been hit one of the worst. But it's not a kind of a growing industry at all. And certainly with the coronavirus, it's going to be a while before they can get to profitability or making any sort of revenue at all. So what are Trivago doing in regards to the coronavirus? Well, basically their biggest expense is advertising. So they pretty much cut as much advertising as they possibly can. And they've also let go a lot of staff. So their reaction to it is to cut as much expenses as possible. The problem is they've already cut quite a lot of expenses. So we'll see how much more cuts they can sustain. But yeah, they're really downsizing, which is probably the right move, to be honest. And at least they have some cash on the balance sheet to weather the next storm. But yeah, with all the competition, it's going to be fierce to see who comes out the other side alive. But I think as I mentioned, I think there is the possibility of consolidation in this industry. Just like the airline industry, there's so many airlines and there's so many price comparison sites in Europe. It started out as a European company, but now Trivago have ads in Australia, and they're just starting to invest in the Americas as well now. But I think there's definitely a lot of competition, so the chances for consolidation are higher, because consolidation would kind of help everyone in the industry, because they're all kind of at each other's throats, all trying to undercut each other for advertising revenue. Trivago spent the majority of its advertising expenditure on TV ads, which personally you might agree that I think TV ads aren't a very long-term sustainable choice for advertising dollars. So they're kind of because they're an old company. Like, I remember seeing Trivago ads when I was a kid, like one of these ads.
As part of your credit card's reward program, there's a 5% discount applied to your hotel room. $120 for the night, please.
Oh, 5% off as well as free Wi-Fi. Not bad.
$95 for the night, please, sir.
Wait, what?
If you use Trivago, Trivago will compare hotel prices from hundreds of websites worldwide, so you can often find a better deal for your hotel room. And also free Wi-Fi. Maybe you should try Trivago next time. Hotel Trivago.
Yeah, so Trivago are still, the majority of their advertising expenditures on TV ads, and I think this is a really unprofitable. This will be an unprofitable expenditure in the future. I don't think this is long-term sustainable. So I think Trivago, like, if they want to survive or if they want to become profitable, they kind of need to be more innovative and get up with the times. Like, using TV ads, it's not going to work forever, so you're going to have to stop thinking so old school and start thinking a bit more new school, perhaps on social media or something. So that isn't a great point in my eyes. So for Trivago to make money, it seems that they need to spend a lot of money on TV ads and stuff like that, and expanding into new markets. So what are my final thoughts on Trivago stock? Well, I was tempted to buy it, but after looking further into the company, I'm going to pass on this one. I think there is a possibility that you could get a 2 or 3x in the next 5 years, but I don't think it's realistic at all to get back to the levels that it used to be at, even to $10. I don't think that's realistic at all. So for people who are looking for a turnaround, I don't think this is the stock for you. I think there's better opportunities out there. I think there's too much competition, especially with Google and all the other competitors. I don't think Trivago have the innovation to succeed and get through to the other side. I think they probably will survive, but I don't think they'll become one of the main players in this space as they used to be. So for all those reasons, I think Trivago is a pass for me. However, if you want to invest in it, I wouldn't say, oh my god, this is a terrible investment, but I certainly wouldn't put the house in it either. So there are my thoughts on Trivago. Let me know what you think of Trivago and my analysis, and if there's any other stocks in this industry or any other stocks at all that you want me to investigate, please let me know in the comments below. I really hope you enjoyed the video. I really hope you learned something, and I'm really looking forward to catching you all in the next one. Thank you so much for watching. Goodbye. Cheers.